Okay, joining us now to dig a little bit more into this and is former Federal Reserve economist Vince Reinhart. Vince, great to see you.
Thanks for having me.
You heard what the gentleman had to say on Capitol Hill. Your takeaway from Jay Powell's testimony today?
There was a couple parts. He does think the Federal Reserve and the U.S. economy is in a good place. The worries about growth he has going forward are mostly about Europe, and that given that the domestic economy is performing well, he's going to be pretty patient. In some sense, the best advice I've ever gotten on monetary policy is don't listen to what they say. Just do your best job at forecasting and assume they'll do the right thing. That's what Jay Powell's doing right now.
Vince, he did make some comments about U.S. debt. He said that it's an unsustainable fiscal path.
So remember a couple things. One is that in virtually every one of his predecessors' testimonies, there's got to be a back-end couple paragraphs that worries about the federal deficit and the longer-term trajectory of federal debt. So he's making no change in precedent from the last 30 years of Fed appearances. But The second thing to remember is that Jay Powell job before he came to the Fed was at the Bipartisan Center, where he was instrumental in working on how to handle debt ceiling issues, debt clocks, those sorts of things. And so this is a little more near and dear to his heart.
Vince, so that sounds like you're saying it was, standard operating procedure. But, Jerome Powell has made some missteps, too, from his public commentary. And it seems like he's learning from his mistakes. He's giving a little less guidance and he's giving the public what it wants to hear. As Adam mentioned, he said patient many times. He said that the Fed was going to take a wait and see approach, the idea that a hike would not be coming. My question to you, and I've been asking this question for the last few months. When I first started asking it, people were laughing at me, but it's becoming more serious here. Do you think that instead of getting a rate hike, we get a rate cut?
So in our economic forecast, we get a rate hike, not a rate cut, because growth is still above potential output. The unemployment rate is low, and there are cost pressures emerging. And in that environment, the Fed is going to see a little bit higher inflation, and it's going to have a forecast of higher inflation still, and therefore will have a reason to want to raise rates at the end of this year. What Powell is emphasizing is he's in no rush to do it, and the data will have to determine what he does. In some sense, you are right. They really haven't changed their policy strategy. They've changed their communication strategy. Jay Powell just doesn't want to be in front and get blamed for things. He wants to be able to point to data that make it self-evident that the Fed should be tightening. He doesn't have it now. Probably by the end of the year he could.
Okay, thanks. Great to see you, Vince.
Same here.